For Part A, Question 1, according to MFRS 134, Bursa Malaysia requires all entities whose debt or equity securities are publicly traded to publish interim financial report, which is mainly a point to public listed company. They need to prepare financial reports for a period shorter than a full financial year, which can be issued semi-annually, quarterly, and bi-monthly. Interim reporting was issued to provide investors and others users with more relevant, reliable, and timely information. Then we move to question 2, which is significant events and transactions that affect Apollo Food Holdings Berhad financial position and performance. For the first point is increase in revenue and profit. The increase in revenue, which is for 28.09%, indicates that the company generated higher sales during the interim period. This leads to higher profit, which improves the company's performance. At the same time, higher profit will increase retained earnings, which will strengthening the financial position of the company. From the financial information for the quarter 4 of 30th April 2025, we can see that the higher sales driven by higher domestic and export sales. Point number 2 is dividend payment. Dividend paid was RM 28 million and interim dividend is 20 cents per share. Dividend payment represents a cash outflow to the shareholders. It reduces both cash and retained earnings in equity. Even though it does not affect profit, it impacts the company's financial position by reducing company's total equity.
Now let us move and I will explain the current and comparative periods based on the unaudited interim financial statement of Hong Leong Bank Berhad. The current period refers to the most recent period being reported. Based on Hong Leong Bank Berhad, the Statement of Financial Position (SOFP) is presented as at 30th June 2025. Meanwhile, the comparative period refers to the same period in the previous year. In this case, it is as at 30th June 2024 for the SOFP. The other financial statements such as Statement of Profit or Loss and Other Comprehensive Income, Statement of Changes in Equity, and Statement of Cash Flow cover the period from 1 March to 30th June, which is quarter 4 in each year for both current and comparative period. This comparison allows users to evaluate the bank's performance over time and identify any improvement or changes. In conclusion, presenting both periods helps make financial information clearer and more useful for decision making. MFRS 8 is a financial reporting standard that requires companies to disclose information about different parts of their business, known as operating segment. An operating segment is a component of a company that earns revenue, incurs expenses, and has its performance regularly reviewed by Chief Operating Decision Maker or CODM. The purpose of MFRS 8 is to help users such as stakeholder and investor better understand how each part of the business is performing. It improves transparency by showing where the company makes profit and where it incurs costs.
Next, I will share about Shift of Operation Making, CODM. What is CODM? It is a function and not necessarily a person. The function is to allocate resources to and assess the performance of the operating segments. It is likely to vary from entity to entity. The title or titles of CODM are not relevant as long as it is the person responsible for making strategic decisions about entity segment. Post Mission Berhad, the Chief Operating Decision Maker is the Group Chief Executive Officer. This is because the CEO reviews segment performance and makes decisions on resource allocation which fulfill the role defined under MFRS 8. For example, based on Capital A Berhad Annual Report 2024, The chief operating decision maker is the board of directors. They are responsible for allocating resources and assessing performance of the operating segments. Now I will talk about segment reports. According to MFRS 8, it requires company to disclose segment information based on how management internally organize the business. There are few types of segment reports, which is products and services, geographical areas, and major customer. For example, we go through the Integrated Annual Report 2025 from Astro Malaysia Holding Berhad. On notes of financial statement, it states that the company gives a service in 3 separate segments based on operation segment. First, the television segment, which provides television and broadband service. Second, the radio segment, which provides radio broadcasting service and media sales service. Third, other non-reportable segments. Last but not least, we look at the Integrated Annual Report 2025 by Telecom Malaysia. Based on their notes of financial statement, the company has a few operating segments in accordance to MFRS 8. The first one is consumer banking that provides a wide range of performance banking solution. Second is the business banking that covers SME and corporate and commercial banking. Third one is financial market that provides foreign exchange, money market, hedging, and investment solution to banking customer. Last is others, which refer to mainly other business operation.
Based on MFRS 8 operating segment, segmental reporting provides useful information that helps user of financial statement make better economic decisions. To further support my explanation, a snippet from MKH Berhad segmental report will be presented as clear evidence of the figure discussed. Firstly, segmental reporting helps users to evaluate how each part of a company is performing. For MKH Berhad, the property development and construction segment generate the highest revenue, about RM483 million, while the plantation segment contributes around RM363 million. However, in terms of profit, the plantation segment performed better, earning about RM80.87 million compared to only RM22.73 million from the property segment. This shows that higher revenue does not always mean higher profitability, as the property segment may have higher costs or lower margins. Overall, the report highlights that while both segments are important, the plantation segment contributes more effectively to profit, helping investors to make a better decision on performance evaluation and future investment. The second key benefit of segmental reporting is that it helps users better assess the company's risk and return by showing how its assets are allocated across segments. From MKH Berhad's report, the property segment holds about RM2.16 billion in assets, which is significantly higher than the plantation segment with RM623.74 million. This indicates that a large portion of the company resources is concentrated in the property segment, exposing the company to higher risk in that area. As a result, any downturn in the property market would have a greater financial impact on the company. Therefore, users can evaluate how risk concentration affects overall return and make better judgment about the company's sustainability and performance.